Hi, welcome back. Brian Matthew from Verico the Mortgage Professionals in session number 2 on budgeting for first-time homebuyers. In my first introductory session on budgeting, I gave you an overview of how important I think budgeting is. It's probably the most overlooked financial strategy for anybody to undertake, whether you're a first-time homebuyer or you're an existing homeowner. And hopefully by going through this process, you're going to have a much better understanding of how you can afford to buy a home or the changes that you'll have to make in your own financial plan to be able to afford a home. So I gave you some homework in the first session. I told you to get a notebook and record in that notebook for the last 30 days or 31 days all the expenses that come out of your wallet every month, all the expenses that don't come out of your bank account, all the things you spend cash on. So hopefully you have now taken that and summarized all those particular expenses. Then you've taken your bank statements and you've looked at those for the last 12 months and you've gone through that and you've analyzed where your money's gone in your bank account. And then finally you've taken your credit cards and taken a look in your credit card statements to see where you've spent your money there. And with all of that information, you have summarized it into different categories, and now I'm going to introduce you to the calculator that I use with my clients to show them how to take all that information and put it into something that's going to make sense to them financially. So I gave you a website to go to. It's Canadian First Financial Centers. This is a sister company to us at the Mortgage Professionals. As a mortgage broker, we've always been concerned with the liability side of the client's balance sheet. We haven't had the ability to look at the asset side, but with Canadian First we now do. And our focus with our home buyers is to try and take a look at their mortgage and marry their mortgage into a financial plan. A lot of people don't think that a mortgage is a financial planning tool, but it's the single biggest loan you're ever likely to make, and it makes very, very good sense to make sure that it fits within an overall financial plan. So, you can have a look around the Canadian First Financial website. There's a lot of valuable information in there, but where we're going today is we're going to go to Tools and Calculators, and we're going to go down here under Cash Flow. And this is a cash flow calculator that we're going to input all the data in. I'm going to go into the calculator and I'm going to bring up the first scenario. And by the way, when you create these scenarios, you can actually go in, you'll see I've loaded some in here. When you create your own, you can go in and load it for future purposes, change it, and I'll show you that later on actually in session 3. So we're going to load sample number 1, and this is basically a summary. You'll see in the cash flow calculator there's a summary sheet which basically gives you a summary of your income, expense, and what you have left over. It goes through income and all the expenses. So we'll start off in the income side. The easiest way for you to determine what your actual net income is to get your T4s out for last year and go through your T4s and see what you earned in gross income and then what deductions you have. Normally those would be taxes, CPP, UI, and perhaps you have a pension plan. So in this case, we had $50,000 coming in with a couple, $50,000 each, and their CPP, UI, pension plan contributions are 15, so their net income was $35,000. On the expense side, you'll notice there's nothing in for mortgage yet. They pay $1,000 a month in rent. There's no property taxes yet or property repairs. They have a small $300 insurance policy for a tenant's liability package, and they pay utilities of about $1,200 in addition to their rent. Cable and internet for $1,440, rounded off to $14,940 for housing expense. On the other side, we've got transportation expenses. They figured in there they'd spend about $400 roughly a month in gas. They had 2 cars, so car repairs were about $1,500 for the one they owned. Insurance of about $1,800. They had a lease of about $4,800, so we had expense of about $12,009. In the second expense category, we looked at living expenses, and those include groceries. This particular couple thought they spent about $300 a month. Looking back through their bills, they figured they spent about $3,000 in clothing. Household items, things they might buy for the house, decorations, Christmas lights, other things, about $600 a year. Entertainment, movies, beer, bars, $1,500. Dining, they figured they spent about $200 a month going out to eat. Their cell phones cost them about $1,200. And you notice I've got another category down here, subscriptions, newspaper, Netflix, and other, for anything else you find in your living expenses that you want to plug in under this category. Then we went over to healthcare expenses. Now for most of you, your healthcare is probably covered by your employer. So you won't see anything in this particular category other than, in this case, they had a small life insurance policy of $1,000. On the third expense sheet, we went to their liability side. So they had loans they were paying about $300 a month on, credit cards of about $200 a month. They had pensions, contribution to RSP of about $1,200, and savings of about $1,200. One of the important things when I'm looking through somebody's financial picture is to look at their liability side to make sure that when they go into a home, that their loans are not going to be sitting out in the never never plan and never get paid off. So we want to make sure you still have money in your budget to reduce your debt. On the other expense side, we've got child care costs at the top. For a couple perhaps that has child care, that's a fairly heavy-duty expense. This particular couple didn't have that. They did have vacations of about $5,000, gifts of about $1,000. They had a membership in a golf and a gym for about $2,000. I've got another category down here for sports, hockey and soccer. If you have your kids involved in competitive sports, that can be a high cost. So going through this particular analysis, we came up with a summary for this couple of about $12,460. Surplus at the very, very end. Their housing costs represented about 26% of their net at this particular point. So what we did after that is we took that scenario, and I'm going to take you into the next scenario now, and this was their scenario, plus we asked them, based on what their incomes were and what they thought they could afford, what did they think they could afford for a mortgage payment? In this particular couple's case, that was $1,200. That equates to, right now, a mortgage of about $240,000. We took the rent out, we plugged in property taxes for $2,500, we put in repairs of about $1,000. You should have something in there for home ownership. You never know when you're going to need something around the house. Insurance of about $1,000, utilities of about $4,000, and that pretty well covers heat, hydro, water, sewer. Of course, if you're rural, you may not have those last two expenses, but you want to make sure that you have enough to cover all the utility expense, cable and internet, and mortgage life insurance. There should be something in there for some insurance coverage for your mortgage, and I'll talk about that in a later video. Again, on the expense side, we left all of the expenses basically the same, and that scenario ended up at a cash flow surplus of $2,260. Now, I'm going to end it right there at this particular session. I'm going to do another video shortly, and in that next video I'm going to show you basically how you can analyze your results now that you've got your results down to an income level that you think is affordable for you. I'm also going to show you how you analyze those results in terms of how CMHC perhaps looks at your qualification along the same level. So stay tuned for the next video. It'll be session number 3. At the end of this video, you will see my contact information for any comments or questions that you may have. Thanks for watching. Brian Matthew, Verico, the Mortgage Professionals, and this is Straight Talk.